Good morning. We are here to find out how an amount of 12,40,000 of our hard-earned salary can be retained by us without paying a single rupee tax under the old income tax regime. In this case, I have taken a scenario where a salaried employee earning an amount of 12,40,000 rupees per annum, which works out to 1,03,333 rupees, has paid nil taxes. Let's deep dive into it to see how the payslip has been structured and what are his savings, which has enabled him not to pay taxes under the old income tax regime. Generally, when a company offers an offer letter, we come across three components. One is a basic pay, HRA, and a flexible pay. Basic pay is generally 20% of the total salary, and HRA is 30% of the total salary. It is a flexible pay of 50%, which needs to be structured in such a manner that we get maximum exemptions under the Income Tax Act. In this case, the flexible pay of 51,666 rupees has further been divided into food coupons of 2,200, LT of 3,466, mobile reimbursement of 2,000 rupees per month, and uniform allowance of 1,666 per month. The balance flexible pay of 42,333 has been retained as it is. Now let's see the exemptions one by one. We start with house rent allowance, which is called HRA. In this case, house rent allowance received by the company as received by the employee as per his payslip comes to around 31,000 rupees a month. It is assumed that a person is staying in a rented house paying a rent of 17,500 rupees. From the rent of 17,500 rupees, we need to reduce 10% of the salary because as per HRA calculations, the actual amount received as per payslip per month, actual rent paid less 10% of the salary or 50% of the salary. Whichever is lower will be exempt. Hence, in this case, 10% of the salary for the purpose of computing HRA, salary includes your basic pay plus your flexible allowance. 10% of such amount works out to 7,233 rupees. And when eventually deducted from the actual rent paid of 17,500, you get a net sum of 10,266 rupees. Now, the 50% of the salary in this case works out to 51,666 rupees. The lower of the three components is 10,266 rupees, and hence an HRA deduction of 10,266 rupees per month can be received by this salary employee. This works out to 1,26,200 rupees in per annum. If we go to his computation, we see that his income from salary of 12,40,000 is being fully mentioned. Under income from house property, it is assumed that the person is paying a housing loan. And housing loan up to 2 lakhs, interest paid on housing loan can be allowed as a deduction. It is again assumed that he is getting an interest on deposits of 10,000 rupees. It is assumed that the person is getting interest from his FDs, RDs. That is, he has a habit of investment. So he is getting an interest of 10,000 rupees. So hence his gross total income works out to 10,50,000 rupees. Coming to exemptions, as I told you, HRA has been exempt to the tune of 1,23,200 rupees as seen in this Excel sheet. The other components of flexible pay, which is food coupons, LTA, mobile reimbursement, and uniform allowance, also qualify for exemption. Hence, your flexible pay plays an important role in reducing your total income under the old income tax regime. Be careful while structuring your flexible pay. net of exemptions, your gross total income in this scenario works out to 8,14,000 rupees, and net of standard deduction, it works out to 7,64,800. Under deductions under Chapter 6A, we see deductions under Section 80C. Maximum deduction of 1,50,000 has been given. Section 80 DDB, which talks about NPS, is maximum deduction 50,000 has been given. Medical insurance of 50,000 and a preventive medical health checkup under 80D of 5,000 has been given. And interest on deposits under Section 80 TTA, maximum deduction of 10,000 has been given. So in this case, if we see his Chapter 6A deduction, this person has used the maximum limit under Section 80C, 80 DDB, and his medical allowances. So when we reduce the total deduction, your total taxable income would come down to 4,99,800. Tax on 4,99,800 under the old regime comes to 12,490. However, if your taxable income is less than 5 lakhs, then the entire tax can be netted off using rebate that you receive under Section 87. And hence his total taxable income is nil or zero. This shows that with our investment patterns and the way we take care of our flexible pay, we can actually reduce our tax to a greater extent. Hope you liked the video and hope it was informative to you. Please let me know on what all subjects you want a clarity so that I can make the videos accordingly. Thank you.